Hello, it is April 12th, 2026. This is the weekly outlook in the DeFi Dojo. This is where we discuss the markets, charts, and where the market might be heading this week. We do this almost every week. I'm going to try to start getting into it more and more now that the market's starting to move. We had quite a bit of sideways action for months and months, and it didn't move anywhere. So I kind of toned it down on the weekly updates because I'm more of a macro long-term trader. I can nail down where I think the market's going pretty accurately on the higher time frames. Shorter term time frames and day trading type stuff I also do, but not as much because that's really risky. But let's get into it, right? So here's the Bitcoin chart, and I'm using the CME chart this week because we haven't looked at it in a while, right? I haven't looked at it in a while because there really hasn't been any major gaps to look out for. And usually the gaps fill, and that's kind of our trading targets. But if we kind of just zoom in here, the only major gap that we have is this one at 81,210. So if we were to make a nice move to the upside, that would be the target. And for me, since we're in a downtrend, I don't really know what this line's doing. It should be like down here. Since we're in a downtrend, that's kind of where I think I would want to try short. I think that the bear market is kind of just beginning. Usually it takes quite a while for it to pan out. And until I see some sort of bullish divergence at the bottom, like we saw in the last cycle bottom, where you have the RSI heading in an uptrend while we're heading in a downtrend on price, that's where I like to buy things. And I think because Bitcoin is so accepted now as a real asset, I don't think they're going to be able to hide the divergence. I think it's going to show up pretty clearly. And so that's why I have this question mark down here. As you can see, we've made a lower low, and so has the RSI. So that is what we call convergence. They're moving together. It's when they start moving in opposite directions that we want to pay attention, because they can't hide the fact that the strength is returning into the market. And that's what an RSI or a MACD is. It's a strength indicator. It's not going to show you what to do unless you know what to look for, right? So how I knew Bitcoin was close to a top is because we had continued downtrend here on the RSI, which shows continued loss of momentum, right? The strength is decreasing even though the price is increasing. And that same thing happened back here in the last cycle top, and that's how I was able to nail that cycle top as well. So I'm waiting for a lower low in Bitcoin where the RSI makes a higher low. That's basically what we're looking for, and then we can kind of draw this green line over here somewhere, right? Depending on what that looks like. So that's why I think we're still not. This isn't the bottom, in my opinion. I think we still got a ways to go. I think we'll at least see 53K on Bitcoin, like minimum, at some point. And I think a nice short from this gap fill to 53 would be pretty nice, right? Like, so that's kind of what I'm hoping for. Of course, I could be wrong. This is not advice in any way, shape, or form. This is just educational content and to give you ideas. And honestly, my main goal in life is to help you become a better trader. I want to teach people how to make and read their own charts so they can make better decisions for themselves. I do one-on-one sessions to teach just that, and I've done over 160 different individuals who have taken that course. So I'm pretty good at it at this point. Let's go look at Ethereum. So Ethereum is still in a major downtrend. There's nothing exciting here to see other than the fact that we did close above the 8 EMA for the first time since January, right? So that's something to be said. And now we're kind of retesting that now as we open this week. And so maybe a trade up to 2,500 could be on deck here. And it fits in nicely with the downtrend, this green line you see, the 21 EMA, as well as this 0.618 fib. It's all kind of in this same area. And perhaps this would be a pretty decent risk to reward setup. We could kind of map that out if you'd like. So you just take this long position tool, and let's just say you're waiting for a retest of the 8 EMA, which is what we got now. Our stop loss would be a close below the 0.5, or let's just call it 2,000, right? And our exit take profit is right around 2,500. Well, that's a 3-to-1 risk to reward ratio from where we sit right now. 2.2, it's not great. If we can get like a retrace down to that 21 EMA on the daily, that'd be a better R&R. So maybe if we get a pullback back to 2170-ish, somewhere in that zone, could be worth a good long up to this level. And perhaps that works out. If it does fail that point 0.5, then I do still think we're heading down to the 1700 level at some point. I just, who's gonna tell you, yeah, it's gonna go up first before it goes down? I don't know. This is crypto. Like I can't I haven't been able to trade crypto in a while. Some people are really good at the scalping and stuff on it right now, but when it's trading sideways like this, it's very difficult. My moves are like hit the downtrend. Okay, I want to short it, and I'm going to catch this giant move rather than trying to scalp these little moves. So I would like to either take a long up to this level, or once it does get to that level, the better move is to short it from there back down to 1700 would be my goal. Trying to long in a bear market's not a good idea, but waiting for those retests to short is kind of what I like to do. If we look at the dollar, we failed that mark again. This is where I want to see it close over, and a few weeks ago it did. So it kind of was like, okay, that gives me a little bit of hope that the dollar is going to head higher, markets are going to tumble. But then we had several weeks of sideways, followed by a pretty crappy move back down. And meanwhile, equities did this, right? So here's the S&P, a nice bounce, two big weekly bounces, but there's this yellow trend line here, and I'll zoom out so you can see where it came from. I did try to provide a description of where it came from using the highs that I used in the text in the weekly outlook channel. But basically, I took the high of December 22 or January 22, December 21 to the high in December of 24 to get that line. And if you zoom in, you can see that that is the resistance that we had last week. And not only is it happening on the S&P, but the same exact line that I used and from the same 2 points of time is also the resistance on the NASDAQ. Now, these are amazing candles, right? Like if you were able to catch longs on this, congratulations. These are great, great moves, but it doesn't really get us away from the fact that these EMAs are bearish right now. So unless this just keeps blasting up through here, I'm cautious still. I do think that it could, right? Because this 1.618 has been my main target for the S&P and Nasdaq for 2 years now, and I was pretty surprised when it didn't finish it here. And we kind of started this bear market early, but that's kind of how markets move, right? They want to fake you out, make you think it's going to go here, and then we drop, and then it goes there. And so that's kind of what I think could happen. And that is basically the top of the market for me. That's where I thought we were going 2 years ago when I mapped this out. But it doesn't have to. This very well could be the start of the bear market, and this is just a fake out before we resume down. We got a lot of Donald Trump tweets that just make the market go crazy, and we have wars and oil, and oil's at its highest peak that it's ever been. Right now it's sitting at like all-time highs. Whether or not it breaks it and heads higher, I don't know. If it does, then that's really bad. I mean, every company's going to suffer if oil goes up anymore. Basically everyone says watch oil. If it's going up, then the market's going down. If it's going down, the market's going up. And while that's true right now, that's not going to be true forever. It will stabilize somewhere eventually, but for the short term, you could watch it. If we just kind of pay attention to the 1.414s here, if those break this week, then yeah, we could be headed higher. So 25,319 on the NASDAQ, and for the S&P, that number is 6821, 6822. We'll be watching that level. If you see us on the weekly chart, and everybody should have the 821 EMAs. I mean, it's the easiest indicator to use, and it's the most accurate, in my opinion, when gauging whether or not we are in a macro bull market or a macro bear market. And right now, we're on the fringe of a bear market, right? These crossed for the first time since, let's go back how far? Since the April tariff scare, right? And it didn't last too long, but you can see once they cross bearish, you typically get a large move to the downside. And in equities, those are buying opportunities. Like we've been going up for 20 years now. I don't know if we're going to get a massive bear market like we did in the year 2000 and 2008. I do know that they do happen. And right now, this whole AI infrastructure thing is happening. And if when I stop to think about it, if AI is going to start replacing jobs, That means people lose their jobs, and the money that they make in their paychecks that goes into the market every week for their retirement plans stops happening. And then you got like an entire baby boomer generation that's cashing out their retirements. So if all of that sort of starts happening at the same time, I don't really know what that's going to look like, but it probably won't be great for markets. So, and of course, this is a broad picture, right? This is like next 10 years sort of thing. I don't know exactly when, the theoretical crap hits the fan. But I do know that eventually it will, and we could have a pretty big bear market. Right now, until we fall back below the EMAs here, I'm in like a neutral zone at the moment, and I don't know if I'll be doing much trading until it either falls below those EMAs, maybe this week, or starts to break to the upside. And there's a pretty tight window for that. You got, if I just draw a box here, you got this box from the 8 EMA to the trend line, right? And so it might likely just trade in this box all week for all we know. But if it does fall down to the bottom of it and breaks below, that would be my cue to short down to 65.89. If it breaks above the yellow line and closes the week above there, well, then that means these EMAs might start crossing bullish again. And that would be my cue to long to this target that I've been looking for a long time. And that's just kind of a short-term trade idea that I'm working on. Long term, I'm still waiting for the big fall. Right, I've done really well personally over the last couple of years since nailing the 22 bottom, and I feel like I was really fortunate to be able to do that. So I'm not rushing anything at the moment. I do still have my retirement plans, like stuff like that. I don't ever recommend anybody touch those. You should just let those sit. But if you're doing, shorter to mid-term swing trading, stuff like that, then this is right up your alley. If we go look at Bitcoin against the NASDAQ, this is another chart that I use to gauge whether or not I'd rather be trading equities or trading crypto. And if Bitcoin is bearish against the NASDAQ, which it currently is, then I know that my money is better spent in the stock market. When we start to get an uptrend again, where it does something like, breaks a macro downtrend like we had back here, where we broke up above this line. In this point of time, I was trading crypto much more than I was trading equities because I have a much better chance of seeing upside on crypto than equities when we have an uptrend, right? It's common sense. So I do still think this is going to fall further. We did close below the 21 EMA, and I think this will head further down, which kind of means good things for the NASDAQ and not so good things for Bitcoin, right? So we could see Bitcoin fall and the NASDAQ rise. Or we simply just see Bitcoin fall further than the NASDAQ falls, and that chart would still head lower. All right, so looking at a couple tickers, Palantir is very bearish. And with the war back on, maybe, who knows, it's very volatile, and it's going to basically move in accordance with whether or not the world thinks that we're in a war or not in a war, or how long the war will go on, because this is kind of a war stock. It's more than that, but it's a war stock at the moment. So if we do get some more bad news on the whole Iran situation, then you can probably see this come back up to the 134 mark this week. If it does get above that, then it can get back to the downtrend. I think we'll probably see 117 at some point in time in the future, and then realistically, probably this golden pocket back underneath $100 for Palantir. That's where I want to buy it myself. And then obviously, if it breaks this red trend line, then I'm just going to get out. But I think this $90 mark is where I really want to aim for. And when it meets up with this red trend line, that to me would probably be a good spot to try adding some Palantir to the long-term portfolio. Looking at NVIDIA, we were in a distribution, but now it's reclaimed the channel. We still are in a distribution, but who knows? This thing is so valuable. I mean, we're almost at, what is this? Almost 5 trillion, making it one of the, I think it makes it the largest asset in the world. I think there's a couple things that are bigger, but it's quite up there. So this had bearish EMAs for 2 weeks and now has come back up. So we'll see what happens. Maybe it wants to come back up to the top trend line again. If it does, I'll short it back down to the bottom one and play that game again. I think this is the one I wanted to talk about. This company, this is ServiceNow, has been on a tear for years, right? If we just kind of take a look at the big picture here, there's a red trend line here. I did buy some in the golden pocket and in the hopes that we'd get a good bounce, but it didn't work out. And now we're falling further. I sold it as well as Snowflake because it's doing the same thing. Software is getting destroyed, and the fear is that AI and Claude's gonna, take them out, right? Like we don't need software anymore if we have Claude. I think that's wrong. I don't think that that's actually I don't think it's gonna take over. These companies are so ingrained into businesses. Adobe's another one that I still believe in long term, and it's been getting hammered. And when those fears come, people just panic sell, and that's what's happening, right? But we're not even at the trend line yet, so we could see this back down all the way to about, let's just call it its 22 low, 67, and that would be a great spot, in my opinion, to buy this company that I think it has a future, right? Like I don't think they're all just gonna die. But we'll see. If that trend line breaks, then my risk is low, and I'll just cut it, and we'll wait a little longer. But the software industry is getting destroyed while other big tech is still heading higher, and the market is getting obliterated in one department, but still just heading straight up in another department. And it's a little. I don't think I've ever seen it. I don't think I've ever seen that happen before, where like it's totally different markets, completely separated. In my opinion, I think that means we're close to something on a higher level changing, and that would be what I think might happen soon in the next year. Is an actual real bear market. If we look at the SPX here, we're kind of already starting that downtrend that I was kind of looking for when 2026 began, and it's on the housing market cycle. So basically, every red line is 18 years, and you can see since the Great Depression, we've had a downtrend, at least some. Like this was the smallest one, right? So at least some form of downtrend for at least six months after that 18-year mark. And here you can see it was larger. Here you can see it was smaller. Here you can see it was obviously larger. But we're here now, and we'll see what happens. I kind of just use it for monitoring, but it's definitely no guarantee. But I think that this could start heading down here, and I don't know how far. Like this arrow isn't where I think it's going to go. It's just showing that we're going down. But I think that we could see this finally break the trend here. So basically just watch that trend line right there, and I think we'll at least touch it at some point. So I do think there's still a little more downside to go at the very least. We'll see if it wants to go make a new high first before it does that, and that's really all you can do. Long term, it's much easier just to buy and hold and wait 20 years and you'll be happy. But short term, we like doing that too. So we like to monitor the markets on a weekly basis, and that's what we do here. So if you like this kind of content, you can hit that like and subscribe button below. I'd really appreciate it. And now is the part where we go into questions and or chart requests. If anybody has any of those, feel free to drop them in the chart or into the chat. It's hard for me to see all the people here. I got a weird view, but there are some. There's been less people over the weeks because the market has been uninteresting, so people are just kind of checking out. I get it. But all right, if there's no questions or chart requests, I will see y'all again next week. And thank you for watching. I've also launched a new strategy. It's my bonsai strategies, and you'll see them in Astrobit. And the hype strategy is down here. So we now have a strategy for Hyperliquid that will automatically trade the markets for you. You can come into each one of these and kind of see how it does, but this is the back test so far, and we just took our first trade, and then you can take a look at the rest of them down here. This is for people who don't have time to watch charts and just want to be invested in crypto in some form. It will automatically trade for you through your account. Doesn't hold your funds. It remains liquid at all times. You're charged daily, so you can stop at any time. It's a very liquid way to automatically invest into the markets. If you have any questions or want to learn more about that, you can always DM me, and my DMs are always open. All right, guys, thank you so much. Have a great week, and we'll see what we get. Bye.